Friday, January 17th, 2020, Maneco 64, home of alternative economics and contrarian views. This morning, I want to talk about Keynesian economics versus Austrian economics and what are the main differences. Before that, of course, I'll have a quick look at where the markets are this morning. It's 7:26 a.m. London time. Yesterday, we made new highs in the stock market. Not surprising. You look at headlines in the mainstream publications like investing.com, bloomberg.com. They say that it's because the economy is doing so well. Yes, earnings have come out great. But they never talk about the Federal Reserve, the fact that the Federal Reserve has issued a perpetual put protection for the stock market. Anytime the stock market dares to correct a little bit, the central bankers come out and say, oh, don't worry, we're going to be there. We're going to keep printing money. We're going to keep rates low. No one says that, but that's the main reason why the Dow yesterday finished at almost 29,300, up just under 1% to 167 points. The interesting thing is that we've gone up so much with so little correction that the market is almost at 30,000. A 2% correction, which in the past isn't something big. Yes, it's a fairly chunky correction, would mean a 600-point drop. So the higher we go, the scarier it's going to get. How far will it go? Well, it's difficult to say. I looked yesterday at a almost 100-year chart, 100-year chart of the Dow, and there's a resistance trend line in the logarithmic chart coming in around 31,000, or who knows. Anyway, let's see where we are this morning. We've got gold at 1555.30, up just over $3. So gold right now is consolidating around this 1550, 1557, 58 area, not going anywhere at the moment. Silver having a tough time, stay above 18. This morning we're up 10 cents at 1803, up 0.5%. The Dow, of course, is up this morning. I don't think the Dow goes down anymore. It's up 45 points. The Dow future, 29,334. S&P 500 is up a couple of points, just under 3320. NASDAQ 100 future is up 6 at 91.30. Sterling firmed up yesterday a little bit. We're creeping back towards 131. It's now at 130.75. It could change in the next couple of hours. And why do I say that? Well, we've got some retail sales data for the UK at 9:30 London time. UK data usually come at 9:30. If it's a weaker than expected number, you could see sterling go back down. By the way, we had some Chinese GDP data today. It came out in line, 6% year on year for the fourth quarter. It is the slowest GDP growth, though, since 1990 for China. Let's continue. Euro, 111.36, unchanged. Dollar, fairly firm against the yen, 110.22. Dollar remains fairly weak against the yuan. It's now down 0.2% at 686. WTI crude up about 0.2%, 58.60. Brent 64.22. Looks like the Iranian situation now is off the radar. And now we've got the impeachment story out there. Bond market, 10-year yield, 182.70, up about 2 basis points overnight. So still fairly stable, not going anywhere at the moment. So Keynesian economics versus Austrian economics. Many of you have heard of both. Many of you know about it. But I like to refresh these things. Because the thing about making YouTube videos is that you always get new subscribers, new viewers, and that's how it goes. I want to let people know that's the mission of this channel, to basically let people know about that there is an alternative to what we have today, because what we have today is Keynesian economics. The mainstream PhD economists, they're major proponents of Keynesianism. They might say they're not, that they're more free market and things, but I wouldn't buy it. Why? Well, because nowadays economists, their common denominator is government intervention, fiscal policy, central banking interference in the free market. And those are all the hallmarks of the Keynesian philosophy. Austrian school, unfortunately, is not as divulged. I only learned about it back in around the year 2000 when I started looking into gold, into free markets. Laissez-faire, that's the word for the Austrian school. Laissez-faire, let it be in French. Unlike government interventionism for the Keynesians. So what is laissez-faire about? Well, it's about having small government, small bureaucracy, no central bank, sound money, free markets, allowing the market to do what it has to do. For the Austrians, Austrian School of Economics, the most important thing is that prices determine how assets, commodities, and everything else is allocated in the market. For them, prices or ratios are signals of where resources need to be allocated to. For the Keynesians, on the other hand, they think that the government, through fiscal spending, or the central bank, through creating fake credit out of thin air, can influence prices and demand by the consumers. For the Austrians, they look at consumers as producers as well. So they think production is just as important as consumption. The Keynesians, they only think consumption is the important thing, that it will drive production. And that's why the US economy is almost 2/3 consumption these days, because they've been down this Keynesian path. So who's a major proponent of the Austrian school these days? Well, it has been for many decades Ron Paul, and I even met Ron Paul back in 2002 at the Mises Institute. That's MISES Institute. Von Mises, Ludwig von Mises, was one of the major Austrian School of Economics economists. He came from Austria, settled in the United States, and that institute was created by him. And I went there for the 20th anniversary in 2002. I just started learning about the Austrian School of Economics, and I went for their 20th anniversary conference, and Ron Paul was there speaking. And so that was a great experience. They had all these different seminars. One of the seminars I was in, Ron Paul was there sitting as well, listening. And after the seminar, I went to have a chat with him, and I asked him about the Golden Economic Freedom essay by Alan Greenspan from 1966. Because believe it or not, Greenspan had Austrian school leanings as well when he was younger. And Ron Paul said to me that he had that essay autographed by Greenspan when he was testifying in Congress. Ron Paul was in the committee that questioned him. And Ron Paul asked him, do you still believe in what you wrote in Gold and Economic Freedom, Small Government? And Alan Greenspan said, yes, I do. The only problem is that the politics, people don't want it. So that's my experience with the Austrian school, some of my experience. The other point I would make, of course, John Maynard Keynes is the major, well, that's his name is used, right, for the Keynesian economics. So I'll go through here. There's a story in the Mises.org website. Keynesianism loves the total state. So I'll go through this. It's by James Martin from the 18th of September 2009. It says J.M. Keynes' famous foreword to the 1936 German edition of the General Theory. I won't read the whole article, but I'm going to read also an excerpt of the introduction to his book in German in 1936. It says, historians write about economics with a fearful and trembling hands, but economists brashly and cheerfully tackle historical enterprises if they enjoyed some special commission prerogative. What follows this brief introductory material is not an expository essay, but a document for all to examine, economists, historians, and the general reader alike. It may be of some embarrassment to both Keynesian and anti-Keynesian partisans, to both those who have never known of this subject and those who have known of it but who have been inhibited by psychic pressures, ranging all the way from an exaggerated sense of delicacy to intellectual cowardice, from ever saying anything about it. Once one can read whole reams of economic literature written by both fervent followers of John Maynard Keynes and his attackers as well, and never know that there was a German language edition of his profoundly influential general theory late in 1936, for which Keynes wrote a special foreword addressed solely to German readers. By that time, the National Socialist regime of Adolf Hitler was 4 months short of 4 years in power in Germany. So this is the, I won't go through the this little article anymore because the important part is here now. This is what he said in his introduction. I will put the link to this article below in the description. You can read it all if you want. So this is what he said in the introduction to the German edition of his magnus opus. And I quote John Maynard Keynes, "The theory of aggregate production, which is the point of the following book, nevertheless can be much easier adapted to the conditions of a totalitarian state than the theory of production and distribution of a given production put forth under conditions of free competition and a large degree of laissez-faire. This is one of the reasons that justifies the fact that I call my theory a general theory." So I'll end at that right now. So basically, Keynesian School of Economics is a proponent of interventionism, big government, debt, central banking, market manipulation, all those things that are anathema to freedom. Austrian School of Economics, on the other hand, they are proponents of laissez-faire, small government, free markets, non-interventionism, sound money, no central banks. Of course, there are divisions within each school, but this is just the general, how can I say, difference for me. You might have a different opinion. If you do, please comment below in the comment section. So if you enjoyed this video, make sure you hit the like button, Subscribe to the channel if you haven't yet. Please share this video far and wide. It helps the channel, as I say many times. Make sure you also hit that little notification bell above to be notified of all my new videos. And you can also follow me on Twitter, BitChute, Steemit, and DTube. I wish you all a great day. Take care. Bye.